Hi, I'm Kevin McPartland, head of market structure and technology research at Coalition Greenwich. Excited to be here today with Bill Ruvo, who is business development director in the Americas for capital markets at Equinix. Bill, good to have you here.
Thank you for having me. It's great to be here, Kevin.
Yeah, so data centers literally underpin nearly everything that goes on in the capital markets. Something that I think people don't talk about enough. Equinix is one of the major providers, which is what you're going to talk about now. We think of Equinix as a data center company, so effectively just selling space. But what is it really that you do more holistically? And talk a little bit about your role, if you could.
Great question. Thanks, Kevin. So Equinix is the world's digital infrastructure company. We definitely see ourselves as much more than a colo provider. We're a platform company. And our secret sauce is in the ecosystems we've created. And we've achieved this through a really successful execution of our interconnection-oriented architecture, where the ability of the participants in our ecosystems to digitally connect with each other to efficiently and cost-effectively achieve their business goals. While we cultivate a number of industry-specific ecosystems, my specific remit is to look after our capital markets ecosystems across the Americas, which comprise exchanges and trading venues, market makers and broker-dealers, HFTs, prop trading firms, buy-side firms, microwave connectivity providers, classic NSPs, as well as the leading financial extranets, and of course, many of the critical service providers that are essential to our clients' workflows.
So it's not that you're just offering space in those data centers. It's that if you have such a huge proportion of the capital markets in your data centers, you can connect all those data centers around the world, which allows all those participants to sort of communicate with one another, correct?
Exactly, and operate digitally.
Interesting. And so, I mean, at least for me, I started thinking about data centers in financial markets maybe 15 years ago when low latency, like high frequency trading really sort of came on the scene and people started to think about it. You could argue that at least for some of the high profile trading styles, the latency race is over. There's only a few folks in the world that really truly compete on speed at this point. So how has the business evolved since then? Obviously, co-location is still very important, but how has the business evolved sort of since those early days of high frequency trading and low latency?
Yeah, and I think let's go back to those early days and post 9/11 when everything started to go electronic, and Equinix, benefited by being at the forefront, working to capture the matching engines for the most liquid markets. At that time, it was all a bit chaotic and a bit decentralized. Customers were bringing direct feeds on-prem, matching engines were being deployed in different data centers, and the most latency-sensitive trading firms were forced to deploy multiple instances of their trading apps to effectively trade different markets. It was early days for colo. Ultimately, we Equinix were successful in attracting the majority of cross-asset class electronic engines, giving the customer base and the industry in general the opportunity to rationalize on-prem and multiple data center deployments. From there, we developed the most robust community of service providers, providing customers the opportunity to rationalize their MPLS, release line spend. And finally, and very importantly, Equinix works tirelessly to establish partnerships with the major cloud service providers. And we can now boast we have one of the largest, if not the largest, number of low latency cloud access nodes globally. Very important to our customers who are executing a hybrid or multi-cloud strategy.
Yeah, so let's use that cloud comment. I think that's super interesting, right? Because on one hand, people might think, well, if everything's going to the cloud, then you don't need your own data center space anymore. But it sounds like it's really, in some ways, an opportunity for you in terms of sort of connecting it all together. Is that right?
Yes, it's an absolute opportunity for us to connect it all together and to assist our clients in their journey, as I said, on a multi-cloud strategy. But I think there are a few challenges to a full cloud ecosystem, and I think some of those challenges, first and foremost, would be deterministic latency. Algo strategies are, to a large extent, based on determinism, and that's something the CSPs haven't yet solved for. We saw this in the early days of crypto, when HFTs were unable to incorporate the digital assets into their trading strategies because of their cloud-native nature and the lack of deterministic latency. There are a couple of crypto platforms that have recently deployed with us here in MY4 and MY5 to capture the institutional opportunity. Secondly, I point to the CSP's commercial models. While many firms are looking to move to an OpEx model, their inability to forecast costs poses tremendous challenges. There can be wild cost swings month to month based on compute. And lastly, I think there remains a lot of concern over data egress costs, although we're seeing changes there. Interestingly, we're seeing less concern around security when it comes to cloud adoption. From a data perspective, we're seeing the trend toward cloud-adjacent data storage continue, primarily driven by faster and cheaper backup and data transfer.
Yeah, I mean, I think in the end, right, it's not one or the other, right? There's use cases for cloud, there's use cases for sort of having more control over those servers and data yourselves.
I agree completely. It's not an either or. We work very closely with the cloud service providers and our customers to optimize their experience, both from a colo perspective and from a cloud perspective.
Yeah, that makes sense. So sort of to carry on from that, so co-location has long been thought of as a sell side problem, right? So that's something that the brokers or the traders need to do to support their buy side clients. Are you working more with the buy side directly these days?
Yeah, we've been working with the buy side for years and years, but buy side is a very broad description, right? Different segments of the buy side have different market connectivity needs. A hedge fund might have very serious latency requirements. A large asset manager, not so much. But what all of these firms need and can benefit from is our ecosystem of market makers, broker dealers for trade execution, OMS and EMS providers for order and execution services, market moving news providers, market data providers, and as I said earlier, access to the largest number of cloud access nodes on the planet. Another key driver for buy-side adoption of Platform Equinix is our sustainability pledge and how that can assist our customers achieve their sustainability goals.
Mhm.
And then finally, through digital services, we can help our customers diversify both in terms of asset class and geographies very quickly and efficiently.
So I'm going to jump on that sustainability bit. One of the things that people also don't think about is obviously these data centers are massive. They need a lot of power, space. We already talked about real estate, but like power. So like, how do you think about that? That must be like a constant evolution and sort of strategy discussion within Equinix to make sure you have the electricity you need in a sustainable way and in a cost-effective way for both the firm, but also obviously for your clients.
Yes, we have very aggressive carbon neutral goals that we're working towards. And then we also, we address the challenges in all our key metros through new ground up builds. And in planning these builds, we work very closely with our key magnet tenants to make sure we're addressing their evolving tech and infrastructure needs, not only today, but what they're planning on for the future. We're having great conversations with our clients around their plans for quantum computing and AI. We're also implementing liquid cooling in many of our data centers in anticipation of these requirements. So, as I said earlier, we work very closely with all of our clients and the magnet tenants to make sure that we are supplying them with what they need in terms of space and power. Power's become a bit of a challenge that we are working through.
Yeah, I'd imagine so. And so a great last topic. You mentioned briefly AI. So let's talk about that because there's probably not a hotter topic right now in fintech. A lot of demand. I'm sure you have a lot of clients building their own large language models and different implementations of AI. And in doing so, deploying GPU after GPU after GPU. So what are you guys as a firm thinking about there? How are you supporting clients there? And where do you see that evolving to?
Well, we're supporting them as they're, according to their needs. And we've also developed a very, very strong partnership with NVIDIA to offer it as a service because everything's moving to an as a service model these days. So, as I said, we're working with clients on their bespoke plans, as well as offering some as a service offerings to help them through these early days of AI.
Clearly, there's only going to be more electronification, more data, more e-trading in capital markets, which just means the need for more servers and more space. So you guys are in a pretty prime spot.
We are indeed.
Great, Bill. Well, thank you so much for taking some time today. This is fascinating. Let's make sure we sort of catch up, in a year's time and sort of see how things have evolved. But thanks so much for being with us. Really interesting stuff.
For sure, Kevin. Thanks for having me today. Great to see you.
All right. Thanks, Bill.